Welcome into a brand new episode of WSI TV. Enjoy the show.
Hello everyone, welcome back to WSI TV. Today we are doing a very special edition of Jim's Market Update. As you can see, Jim is not here, so I'm joined by Lea Warren. Jim is very busy getting ready for Las Vegas. The annual Wealth Summit is coming up very, very soon, so he could not be here today, but we are going to bring you the market news anyways.
Absolutely. So we're talking as usual about the S&P 500 today. It's up 1.4% since the beginning of November, so that's pretty good.
Jump, yeah,
and we're still riding that all-time high, so that's awesome. Jim just wanted us to go through everything for you guys since he can't be here. But he's getting ready for Vegas, and we hope to see you there, where he can show you how to use his system and how he knows how everything is working in the market.
Yeah, for sure.
So everything is up. The Dow Jones is up, NASDAQ is up. There's a lot happening right now. It's the end of the year. Trade tensions are still going on, and it's continuing to fill the news. And the big question is, how much longer can the media continue to milk this?
Quite a long time, yes.
Absolutely. And it keeps sounding like we're almost to the end of it. We're almost to negotiations, and then it pulls back again and again. But it really isn't having that much of an effect on the market anymore. I mean, if we look at the S&P 500 right now, we're just continuing on that straight upward trajectory.
Yeah, for sure.
And so even though the headlines, like we say, check your emotions, don't worry about the headlines, in reality, they're just looking for a story, and there doesn't really seem to be one with the market right now, and so they're making this one up.
They're just going with the flow, you know.
Yes, and we still have our jar going. We'll be bringing that with us to Vegas.
Of course, let's look out for that.
So in other news, Disney just dropped Disney Plus, and I know that we mentioned it briefly because we've been ramping up towards it.
The streaming wars have kind of been going on, but yes, Disney did drop Disney Plus very recently, and I think you and I were talking about they totally blew their estimates out of the water. They wanted 8 million subscribers in the first day, and they hit 12.
Yes.
Or they hit 10 million, I'm sorry, but that's crazy.
Yeah.
To have 10 million subscribers on that streaming service in the first day that it even opened. So.
And that was beyond even their goal for this year. They just wanted to reach 10 million by 2020.
Wow, yes.
So. But they got it on the first weekend.
Which is crazy.
So that's riding a high. And then Disney stock surged another 1% on top of the surge that it already got from Disney Plus opening, because Frozen 2 opened this weekend.
Yes, did have that box office, yes.
Yeah, and it's also just really interesting to see that one film from a studio that's putting out dozens of films every year can jump that much from a single movie. And I kind of wonder, is that a bit concerning? Is it not? Because there is this much of this volatility showing in a good way, but there is this volatility with something very small in the overall picture.
But when you are looking at the Frozen franchise, I think that is one of Disney's big hitters. They were really relying on it coming into this new movie. They did have the opportunity. They have partnerships across the entirety of every business. We've got Ziploc. You've got other retailers that they have Frozen licensing going on with that. So I really think they ramped up the advertising for this one. So I don't think that every Disney movie that's going to come out is going to bring this big volatile jump that we saw. But I think they're really capitalizing on the Frozen franchise, and it's going to be good for their stock as the box office weekends continue.
Yeah, and that's actually a good point. I've had my bread that I buy has a Frozen advertisement on it. I hadn't even thought about that.
Yes. They really bought across the board for this one, I think.
Yeah, and then with Disney Plus, Disney's just surging. There's just so much happening in the news with that.
It's a really strong chart right now.
Yeah, and that's one of the few things that's been on the headlines that is positive, because there's nothing negative to say when the stock is surging. And then on top of that, there are all these combination services coming out. So right now you can get Disney Plus, Hulu, and ESPN for $12.99 bundle pack for the year. With all these different bundles, with all the different streaming services, it brings to the forefront this idea of possible monopolies in the future.
Yes, that's definitely something we're concerned about seeing, as they are replacing cable service, like you and I were discussing, and it's something that we don't really know how it's going to proceed from here. We have Apple, we have Amazon, we have Netflix, we have Disney. Everyone's kind of putting their foot in this streaming war game, and they've got all these different services that either can be bundled or can't be, so it's definitely going to be interesting to see whether you just pick two of your favorites and you just go with that, or if you are stuck purchasing all of them, because these companies won't find any middle ground. So that's definitely something that we need to be cognizant of in the future for sure. So this past week, we also saw that Tesla released images of their new Cybertruck, which we were kind of looking forward to because it's totally different from what they've done in the past. It is trying to be Tesla cornering the pickup market when it comes to electric vehicles. But some people thought it was kind of a bit of a red herring. If you've seen the Cybertruck design, it's a little bit out of the ordinary. We weren't really expecting it, but then again, with Elon Musk, you never really know what kind of designs that are going to come out of Tesla. We did see the price point starting at is $39,000, which isn't actually bad for one that is going to be an entirely electric pickup truck that's got all the capabilities that Tesla has on this one. However, some people think that this is going to be a stunt, and that's not the actual design of the Cybertruck. So what do you think about that, Leah?
Well, so as of this morning, they started releasing people's pre-ordering options, and there's a down payment that you put on it. It's something crazy, like $7 billion has gone into this, or something like that. It's this insane number of people have already put their down payment on this truck, so it has the attention. But at the same time, it's also losing money. So when it was released on Friday, was it released Thursday or Friday? The Tesla stock dropped another 6% in one day. That's a crazy drop.
Yes, and when you look, kind of zoom in a little bit more, we did look into Elon Musk's personal net worth. He lost $770 million in the day. So you hope that it's not a stunt. Maybe it's just a drop in the bucket for him, but you're hoping that's not something that you would toy around with when it comes to $750 million. So.
I know. Yeah, so it's just an interesting move from Tesla. I mean, obviously, like Taylor and I personally are really into the idea of electric cars and all of the saving stuff.
Sustainability, of course.
Yes. But is this the right move to move towards that?
Especially seeing as the pickup market is generally people that are not as concerned about sustainability. It's more for usage, maybe for design, but we're hoping that Elon can kind of get that design into the eyes of the people that are buying from the pickup market, which is the largest design of car that's bought in America.
Absolutely.
So we're really hoping that he can kind of get his foot in the door, or any other electric vehicle company can try and get that sustainability measurement up.
Yeah. And the interesting thing is that this is such a far reach from what we see a pickup truck as, because it's meant to be a utility vehicle. It's meant to be useful and practical. But the design isn't. So it's just a really interesting move. It's really interesting to watch the Tesla stock especially and watch what it does in the future as these pre-orders come in, see if they gain back any ground, because they have lost big. And the Dow took a hit because of that.
It is one of the holdings in the Dow, so.
Yeah, but S&P's still up, so because it's not one of the holdings there.
Exactly.
And then in other news, we had one more thing that we wanted to talk about, which is the IPOs and the failures with IPOs this year. So the big one is WeWork.
Yes, that one's kind of been in the headlines quite a bit recently. We just saw last week that they laid off, I believe it was 20% of their workforce because they had to be bailed out by SoftBank, which is one of their largest investors. And it was a whole thing with the CEO and things that were going on with their finances. So they definitely had a rough start trying to go from this $47 billion company and trying to IPO on the market. And they were considered one of the most valuable companies at that point in time. But after all this went down, they dropped down to something crazy like $8 billion in the span of a week. So that was probably the most recent and most catastrophic IPO failure that we've seen recently. But there were been quite a few this year that they're not really meeting the expectations people are expecting, which is kind of crazy, seeing as we're in a bull market and we have had some good runs in the past. So we're really not expecting these disappointing results, especially on IPOs for big companies that are coming up like this.
Yeah, some of the other ones, we had Bumblebee Foods, which is a big food provider, and then we had Forever 21, which is one of the biggest retail stores on the market.
Declared bankruptcy.
So big failures, which is really concerning when we are in this really strong market. And it begs the question, is this just an isolated thing with these specific companies, or is it a sign of something wrong in the overall market? Right now we're leaning way towards it's just an isolated incident, because the market, as you can see, is very strong, and it has been all year. And these companies, I'm not sure what that deciding factor and what has caused them to fail has been. But then with the IPO concept, there's this kind of possibility for failure that when you step into that, there is a chance for failure. A lot of stocks have issues when they first go public. We saw Uber struggle a lot, which was very surprising, because that's another huge company that's
very successful just in the general terms of day-to-day life, for sure. So you totally would expect that one to skyrocket, but
but in other terms you see it fall short. So all we can do is just wait and hope that these companies come back, or that this is only an isolated incident and this is the end of it, and we won't see any others that should be performing strongly fall short.
So that is something we'll be keeping an eye on for sure. But again, that doesn't affect our impact in the way that we look at the general market. We are in a bull market, of course, because he's still sitting here And although we do have some companies that are big names that you may think, oh no, this is a problem because Forever 21 just declared bankruptcy or these things are going down. That may not necessarily be the case. So again, check your emotions at the door and make sure that you're looking into the right outlets for the news that you're looking for and that we're keeping you up to date. Of course, we will always be here to
give you that advice. Yeah.
Yes.
Yeah. And then, as we said, we are in our bull market. We are all in. Jim has continued to give us that alert that we're all in on the S&P. Yeah, and it looks like we're going to have a really great, strong end to the year. So we're looking forward to that. We hope that you'll continue to join us.
And speaking of the end of the year, the annual Wealth Summit is coming up.
Yes.
Which is why Jim is not here. We mentioned at the beginning of the video. Please, if you have not purchased a ticket yet, go to mywealthsummit.com. They're super helpful things that you're going to be learning if you do join us in Vegas, and we really, really, really want you to have those opportunities. We want to meet you guys. So definitely take advantage of that before the seats fill up. It is coming so close.
Yeah, it's just, I mean, Jim's on his way out on Monday, and we'll be joining him on Wednesday, so it's coming up fast.
Very soon.
And then stuff that you're going to be learning at this Wealth Summit includes what we're talking to you guys about today, about how we know that it's time to be in on the market. Because we're going to be learning Jim's trading secret, his system that tells us that we were supposed to get in right here and ride it all the way back out on that high. So come join us. We would love to meet you. Jim can't wait to meet you guys, and we'll see you very soon. So.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.